I know that you believe there's a bright spot, certainly in your job, which is with yields now higher, bonds are attractive again. But how much volatility and seesawing could we see?
So I'd make a distinction between two things. So in terms of the outlook for the next 6-12 months, the longer term outlook, yes, the yield on bond funds, core bond funds, looks really quite attractive now. Add some more credit, slightly riskier funds. Again, you're looking at very interesting return potential over the next coming years. So I think the medium-term outlook is quite positive. And we, in terms of our asset allocation strategies, we have some concerns on equity valuations going into recessions across countries, given earnings projections, given valuation. But the return for bonds here looks quite positive. This is on the back of, we should acknowledge, really difficult year across asset classes for fixed income, for equities. But now you're seeing, 5-6% type yields for US dollar core bond funds, higher when you have more credits in the portfolios. This is quite attractive. But contrast that with the short term, which is difficult at a time of high inflation, recession, and this very significant central bank tightening cycle. So tactically, this is a difficult time. But I think the medium term picture is pretty good.
So what exactly would you be buying right now? And Andrew, there does seem to be a reluctance for the markets to reprice, what the Fed is telling us, which is they'll fight inflation even if it means starting a recession.
So I think that's right. I think the central banks are committed to fighting inflation. They need to be, given where inflation is. So it's interesting that market pricing is now a bit below the Fed's own projections. And so I still think there's a lot further to go in the Fed cycle and in global central bank cycles. So don't fight the Fed. I think their projections look pretty reasonable. But then if you go to further out the curve, the 10-year part of the curve across global markets, I think the yields now look pretty attractive, and this is what is giving you this 5.5% type yield for global bonds, US bonds, core bond funds. So that's the 10-year part of the curve where the levels have repriced to what look like very reasonable levels now to us.
Yeah, Andrew, do you buy gilts?
So we tend to be neutral, a little bit underweight on gilts. For a long time, we have thought that gilt yields were too low and they should broadly trade in line with where the US market trades. Then that suddenly happened a lot quicker than we would have anticipated in the last week or two. These levels, I think it's broadly neutral. Pimco portfolios, we tend to be broadly neutral, a little bit underweight, but it looks broadly fair now versus the US, I think, in my view.